Hello friends. Before you start accusing me of, hey Vijay, have you started scamming us with these clickbaity thumbnails saying how a fall in gold and silver in 2025 or maybe even earlier could be actually good for you? It's because we saw your these older videos in 2024 that bullion, gold and silver are about to go up. You made a good all-encompassing guide about how to buy bullion cheap and pure. And now you're telling me that bullion might fall? Hold your accusations. In this video, I'm going to tell you something about why a fall, even though temporary, might just be a good thing and how you can profit from it actually. I'm not reversing my call, I'm not reversing my view, and I'm only giving you an additional chance to sink your teeth and take a bigger bite of the pie. Now, before I proceed further, I do hope you remember that you can watch my videos with subtitles in the language of your choice. Here's how. Right, so let's proceed. Now, I have been very vocal about the fact that I am expecting the 2024 year, calendar 2024, to be a bullish year. I've said that in this video at the beginning of the year itself. My logic is very simple, that this is the largest number of national elections being held in a single year, that is calendar 2024, in the history of mankind. Obviously, economic data would be gravy dressed, reforms would be promised, employment or rather unemployment data would be kind of tweaked a little, and a whole lot of performance ratios would be given a massage. Now, obviously, as per accounting principles, debits must match the credits. All right. So next year onwards, a little bit of that sheen, and I mean little, of the sheen on the economic data might just wear off. And therefore, high risk assets might see a decline. And when they decline, the 4-year run that they've had, starting from the lockdowns in COVID in March 2020, where offices and factories were shut, but the stock markets were pricing the stock prices of those shut companies ever higher. That was counter-cyclicality. So I have told you in 2025, we are likely to have a very high probability of pro-cyclicality. And how to trade in the pro-cyclical markets is something that's there in these videos. Now, which is why I told you that bullion will go up. Now, why am I saying that bullion will fall and a fall will be good? Take a look at these two charts on your screen. The first one is gold. It's a very long-term chart. I have marked two trend lines on this chart. One thick long trend line, which is a multi-year trend line, which is why it is bold and unbroken thick. The smaller one is a dashed trend line. It is of a relatively smaller period, although that period itself is not small. Similarly, you take a look at the price of silver on this long-term chart as well. Now, you know me as somebody who believes in a 360-degree worldview of the markets. I take a combination of behavioral finance. I take a combination of technical analysis, screen reading, statistical analysis, and keeping my ears to the ground and taking boots on the ground but eyes in the sky kind of an approach. So now, these charts have told us a very subtle but a very powerful indicator about human psychology. Now, assume that you're one of the guys who bought either gold or silver on the first peak in the chart. You saw the price slide. You're very convinced because somebody told you that gold is a good buy. So you held on to your position. You said, look, I've taken delivery. I don't have to pay any mark-to-market losses or any recurrent financing charges. So I'm going to wait till my price comes and I'm not selling out in a hurry. All the more power to you. But what really happens is over a passage of time, you start to get impatient. You're watching your next door neighbor who's bought something else, maybe a stock, maybe a currency, maybe a commodity other than gold or silver. And he's kind of telling you, hey, I'm going to the restaurant with my wife because I made some money, while your investment in bullion is on skid row. It's sliding, it's skidding. So, what happens? You start to get impatient, and when the price which you bought here after sinking lower comes back to your break even, you will want to get out. Now, this exit by traders who were trapped at higher levels and are now getting a chance to get out at break even, and therefore they are selling, is called overhead supply. Take a look at these charts all over again. However I worded them, bulls are absorbing overhead supply. Now, who provides this overhead supply? What kind of traders, what kind of investors are these? The first thing that comes to my mind is they're tired, they're impatient, they're probably even frustrated, and they're happy to get out. Do you think any amount of convincing will tell them to come back and buy gold and silver in a hurry after they waited for a few quarters or a few years, depending on what price they bought and when, and how many other opportunities they saw their parade passing them by? Now, when I was associated as a consulting editor in an advisory company a couple of years ago, whenever I would make a video on silver, I would get a lot of brickbats from this one particular gentleman, and he would basically get abusive and he would troll me. And ironically, he even contacted me later asking what he should do about silver. But he used to go rant and rant. You're an idiot. Silver will not even give you the returns that a simple bank savings account interest will give you. So you're recommending nothing but bullshit. I will not listen to you. Hey, it's your choice, right? It's a democracy. So, what happened? He was probably stuck at higher levels. Now, convince him all you want, he will not buy again. So, the weaker hand is out. Once gold and silver see some amount of buying by weaker hands at current levels or maybe even higher levels, and the price slides for whatever reason, prices do come down. No market goes up uniformly like a straight line or falls uniformly like a straight line. There are always intermittent corrections. So whenever there's a little bit of profit taking, and people who've bought last at the fag end of the bull run, at the peak prices, will be these so-called frustrated weak hands. They will be eager to get out, and they will provide the last mile resistance to the price when it goes up to the previous levels and then breaks out. Now, what you saw on the chart was a breakout after all the frustrated selling was absorbed. That was called overhead supply. So now, how can you profit from it? You know what happens to me? I'm a guy who basically tells people, talk to my hand because my ears ain't listening to you. I'm very, very self-contained. I'm very, very self-content. Why? Because we have our own statistical and behavioral trading models. I rely on nobody else's inputs and research whatsoever. So tell me what you want, but ultimately I will do what my research says. All right. So I might be very, very convinced that I'm going to go long in something or go short in something. Ultimately, when the trade goes my way and then there is a correction, I will start feeling, look, it's going my way. I wish my exposure was twice, thrice, or maybe 4 times bigger than what it is currently. I could have actually made jam and chocolates in addition to bread and butter. I think it happens to all of us. We are only human. We would like to make more, which is what makes us traders. We traders are capitalists. We want the shortest amount of a waiting time on our investment. In that shortest amount of time, we want the largest amount of profit, and we also want the largest amount of profit in the shortest possible time at controlled risk. So if you ask me, there is a little bit of risk in everything that we do, but buying bullion at this point in time has controlled risk. And if you feel left out, that you haven't bought enough in the prior run up, for whatever reasons you missed out on the bull run, this breakdown because people got stuck and they are holding on, and then providing overhead supply when their break even cost comes and push prices lower temporarily, only to see a breakout occur again, could possibly give us guys who are convinced about our research, about our trade, to bite into the burger called bullion and take a couple of more mouthfuls. This is what I mean by we can actually profit more. If at all, the price of bullion has not really appreciated much in the second breakout, all right, if it is equal to the cost of carry in futures, I would consider that as no appreciation in the price from my previous purchase at all. I would go out there and buy. And what other things would I look at? I would look at the quality of the breakout above a resistance trend line, like I showed you in the previous two pictures of gold and silver. Is it accompanied by higher volumes? If the volume is higher, is the ticket size per trade higher? I've explained to you about what ticket size per trade is in this video on MWPL and a couple of other videos as well. But the last video was the MWPL video. I would also want to see whether open interest has gone up substantially. Again, MWPL. I would want to see the churn ratio. Churn ratio is also in the MWPL video I've explained to you in detail. So now that you know we are at par, you and me understand how we think, I shouldn't actually need to tell you this. You should second guess. If the quality of the breakout is high, go out and buy on the dip or on the correction when the weaker hands are getting shaken out of their long positions and guys like us are getting a godsend opportunity to buy again. This is my logic. This was no clickbait thumbnail here. There was no scamming at all. I hope this video has clarified matters for some of my online family members who've asked me, Vijay, will there be no decline in gold and silver? Will stock prices not correct and drag gold and silver prices lower? Now the answer is, will stock prices correct and therefore pull gold and silver? Yes, it might. But here again, there are special reasons and special circumstances under which that could happen. Now, when procyclicality hits, like I've explained to you in the videos on procyclicality, everything will depend on the magnitude of the selling. If markets are tumbling fast and traders are unable to pay mark-to-market losses, believe me when I tell you this, they will get distressed. The amount of mental stress that they will be subjected to is something 90% or maybe even more number of traders will not be able to handle at all. So you know what they're going to do? They're going to sell everything, including gold and silver long positions. Yes, because mark-to-market margins have to be paid, losses have to be fulfilled. So in those circumstances, yes, gold and silver will fall. Yes, weaker hands will get stuck, and yes, weaker hands will provide overhead supply when the market goes up next. This is all a part and parcel of this game. I've been playing this game for 38 years. I've seen it. Nothing really changes. Play the game patiently, and we are just waiting to see how many people have their foot stuck in the door when procyclicality hits. If it is a gigantic crowd which has a foot stuck in the door out of the exit door in a crowded exit trade, there will be more panic and cheaper prices to buy gold and silver at. Friends, before I sign out from this video, a reminder to subscribe to my YouTube channel if you haven't done so already. Click on the bell icon to receive instant alerts about fresh videos being put up out here. And in the comments segment, do let me know what you think about our work, and how we can help you become better traders by recording videos on subjects that you would want us to help you with. And a request, please share my videos with smart traders like yourselves so I can help a whole lot more people to trade smarter, invest smarter. Thank you for your patience in being with me in this video. Till we meet again in my next video, this is Vijay Bhambwani signing off for now. I wish you have a very profitable trade ahead. Take care. Bye-bye.